Side pocketing. So, what is side pocketing in debt mutual funds? Side pocketing is separating illiquid downgraded investments from the more liquid and quality investments in a debt portfolio. It is nothing but creation of a segregated portfolio in case of a rating downgrade. So, what is rating downgrade? It is nothing but ratings of below investment grade or less than that. So, let us understand what is side pocketing in detail in the coming videos. Let us understand downgrading of ratings in the context of side pocketing. Here we have given possible long term rating scales, that is we have rating scale starting from AAA up to D. What is investment grade rating and what is speculative grade rating? Any rating of BBB minus and above, they are known as investment grade ratings, and ratings of BB plus and below that, they are generally known as speculative grade ratings. Side pocketing comes into picture whenever ratings come down from investment grade to speculative grade. So, let us understand with an example in the coming video. Let us take a debt portfolio. The portfolio consists of certificate of deposits of ABC Bank, certificate of deposits of XYZ Bank, both comprising about 10% and 7% of NAV, and the rating given is CRISIL A1 plus and CRISIL A1 plus for both, and others, that is NCD, non-convertible debentures, about 67%, and we have floating rate bonds, ABC Housing, say 7% of NAV, the rating is CARE A, and floating rate bond of XYZ Transport Finance Company, the percentage is 9% of NAV, that is the holding, the rating is CRISIL AA plus. So, this is the portfolio we have in hand. Okay. Now, let us assume the floating rate bonds, that is ABC Housing and XYZ Transport Finance Company, these floating rate bonds, let us assume that these bonds default in payment, that is they did not pay the maturity amount or they did not pay the interest or the coupon in timely manner. So, the rating will immediately jump to D rating. So, what to do in such a scenario? In such a scenario, obviously when the rating becomes D, the price of such bonds will come down, that is maximum, say for example we have 7% in ABC Housing and 9% in XYZ Transport Finance. So, 9 plus 7, 16%, there will be drop in NAV. However, the actual drop in NAV depends on SEBI guidelines on valuation of these securities as well as redemption pressures. Let us, for the sake of simplicity, assume that the NAV drops by 16%. Now, what to do in such a scenario? Investors, they have two cases possible. Either they can withdraw the amount or redeem the units at a reduced NAV, or they can wait. And how about AMC? AMC has two choices. Either they can segregate these investments into a separate portfolio, or they can continue with the same portfolio. Let us understand how the segregation happens in the coming video. Here the AMC has decided to go for side pocketing, that is segregating the downgraded ratings into a separate portfolio. Now, we have a main portfolio which consists of quality bonds. See, we have certificate of deposits and non-convertible debentures. So, this is the main portfolio. This AMC will continue and this portfolio is open for all investors. And we have a side pocketed portfolio also, which we will see in the next video. Side pocketing is an optional one, that is it is up to the discretion of AMC, and it happens whenever the downgrade of rating happens, that is below investment grade. okay, and no investment and advisory fee shall be charged on side pocketed portfolio. However, other expenses can be charged upon recovery, and no redemption and subscription shall be allowed in the segregated portfolio or side pocketed portfolio. However, to enable liquidity for investors, the side pocketed portfolio should be listed in the market so that investors can trade among themselves. So, once side pocketing is done, we should know that there are two portfolios. One is the main portfolio where the existing investors will be there, and the portfolio is open to new investors also. So, anybody can enter and exit the main portfolio. The other one is the side pocketed portfolio where only existing investors will remain and redemption is not allowed. However, those units will be listed in market so that existing investors can sell their units to whoever they want. So, this is the concept behind side pocketing. So, why side pocketing? We should understand that there is always a chance of recovery. In case of a recovery, that is, if the issuers of defaulted bonds repay the principal amount back, in such a case the NAV will increase, or the profit or the recovered amount should reach the actual beneficiaries or the intended beneficiaries. Let us assume that if the scheme was open to all investors, then new investors will also join the scheme, isn't it? So, the recovered amount will be shared among the new investors as well as the existing investors. So, that is not fair. The recovered amount should reach the existing investors or the old investors. So, the portfolio should be divided into two. That is the main purpose. The new investors, generally some investors, they come for this possible recovery, for this possible increase in NAV. They are generally called as speculative investors. So, the speculative investors should not benefit out of this scenario. That is why side pocketing becomes necessary. Here the portfolio will be divided into two. Okay. One is a side pocketed portfolio which has a separate NAV, the other one is the main portfolio which has a separate NAV. Now, the new investors will be allowed only in the main portfolio, and in the side pocketed portfolio new investors are not allowed to invest. Hence, whenever a recovery happens, the amount will reach only the existing or the old investors and not the speculative or new investors. So, that is the main reason behind side pocketing. That is the main idea behind side pocketing. Now, let us also see some other points related to side pocketing in the coming slide. Side pocketing, important points. We should understand that side pocketing is an optional tool. It is up to the discretion of the AMC, and it is normally done whenever there is a rating downgrade. We had already seen that it is nothing but downgrade of rating from investment grade to speculative grade. And here, in case of a side pocketed portfolio, no investment advisory fees shall be charged. However, other expenses are allowed. They can be charged upon the recovery of the amount, and no redemption and subscription is allowed in the side pocketed portfolio or the segregated portfolio. Side pocketed units should be listed in exchange to enable investors to sell units to some other willing persons who are ready to buy units. So, these are the important points which we should keep in our mind about side pocketing.